Alright, hello everyone, welcome back to the channel. This is Emil from Investing with Emil. And in today's video we're going to be running through Visa stock. We're going to go through the entire reason why you might be interested in buying Visa stock, the growth catalysts for Visa, the potential pitfalls for Visa, its competition, stuff like that, and what I'm going to be doing in regards to Visa. So with all that said, let's get straight into the video. Okay, so I think everyone's heard of Visa, but people might be a little bit confused to exactly how they make money. So just to explain, every time I use a Visa card, the business that I'm paying for with my Visa card gets charged a little transaction fee for that transaction. So that's essentially how Visa makes money. So everything in the shop is 3 to 4% more expensive than it would be if you were paying in cash. So if everyone used cash, everything would be 3% cheaper. So you can imagine like every single transaction gets a 3% surcharge that a lot of the time is going towards Visa. So that's essentially how Visa makes money, but it also like makes money through foreign transactions and stuff like that. However, some people think Visa is a credit card company. In more like recession times, people get worried about credit card companies because they're worried that people will default on their loans to credit card companies. But Visa doesn't have to worry about that at all, so that's a nice bonus with Visa. So Visa is obviously becoming a huge company. It's kind of becoming one of those old and boring companies, and I believe it will continue to be. It will become even bigger and even more boring in the future. But it's still growing at a nice growth rate at the moment, so that's why I'm interested in it right now. So I'll just pull up a picture of the chart here. So as you can see, Visa's had a small but significant drop in because of the coronavirus. Visa stock price doesn't drop very often, so it's very nice. It's very rare that we get an opportunity like this to potentially invest in Visa. However, looking like obviously their PE ratio being at 30 is very high, and their price to sales ratio is also very high. They have a price to sales of around 6 or 7. However, their operating margin, or their margin, is like north of 50% for the last decade. So 50% of the revenue that comes in is straight on the bottom line, which is extremely impressive. For the last 5 or so years, Visa's steadily been growing its revenue by 10%, and it's been growing its EPS by 20%, so its earnings per share. Now, the reason its earnings per share has been growing in the last 5 years is because Visa is a huge buybacker. It's bought back a ton of its shares in the last few years. So I'll talk about that later on in the video, but that's the reason its earnings and its EPS has grown significantly. So just to keep that in mind. So one of the main reasons that I'm still interested in Visa is because it's still in a expanding market. As you can see in the statistic on the screen now, still 77% of transactions worldwide are done in cash or checks. So that shows how much room there still is for Visa to grow. Despite its growing so much already, there's still a lot of room for it to grow in the future. So that's really encouraging to see, and a lot of people don't even realize that there's still so much in cash. There is still room in the first world like the US and Europe to take market share of all the cash transactions, but even more so in like the second world and the third world, where even more cash is used. So you can even see in the last 5 years the amount of card transactions has doubled. So if we get that in another 5 years, that's still extremely fast growth for such a huge company. As we all know, people aren't really buying things in person anymore, especially at the moment with the COVID-19 situation. People are much more likely to buy things online, and obviously this trend is set to continue. But fortunately for Visa, this doesn't affect them too bad because people are using their cards even more online. You obviously can't pay in cash for stuff online, so this actually helps Visa that this move over to online is accelerated because of the COVID-19, but also will continue past COVID-19, and this might just be a catalyst to make people realize, like a lot of people are using Amazon even more now because of the coronavirus situation. And Visa is well on top of this, and they've been acquiring small tech companies like digital payment companies. They keep acquiring. They have plenty of cash on the balance sheet to be acquiring these little companies that are coming out with good ideas for security with online transactions and stuff like that. So they made a investment into Gojek, which is one of those all-in-one apps where you can pay for everything within this app. It's kind of like a Cash App or a Revolut in Asia. So they're making some they're making some acquisitions like that, and will continue to do so in the future to stifle any competition. But we'll get into Visa's competition in a couple of slides. Visa's stock price growth looks like a perfect exponential increase, and one of the main reasons that is because of the huge amount of buybacks Visa has been doing. Visa has purchased almost 25% of the outstanding shares in the last 5 years of Visa stock. So the last 4 years or so, Visa stock price has doubled, but the biggest buyer of Visa stock was Visa itself. So a lot of shares have been taken off the market. So that's one reason to explain the high price to earnings ratio for one of these shares, because there's less of them. So there's going to be a higher price in comparison to the earnings for one of those shares. But this explains the increase in earnings per share that Visa has been increasing at like a 20% clip each year, which seems more impressive than it is when you take into account the buybacks. The revenue growth is the real growth of Visa, so that's about 10% for the last 5 years. The 20% in the earnings per share is because of the buybacks. Its actual revenue growth is 10%, but we're getting a 20% growth in the stock price because of the buybacks. So the other growth factor for Visa is the dividend, actually. Now, its payout ratio is less than 1% at the moment, but it's been steadily growing at 20% a year for the last 11 years. So your 1% now, every 3 to 4 years will double. So if you're getting, say, $10 every year from Visa, this will be $20 in 3 to 4 years for the same amount of stock that you own at the rate that they're growing it at the moment. So a 20% growth doubles every 3.5 to 4 years. And Visa's payout ratio is really low. It's only around 30%, so it's pretty safe at the moment, even with the COVID-19 situation, which is going to really hugely impact their revenue, because not very few people are going to be using Visa cards in restaurants and, cinemas and stuff. So their revenue is going to take a big hit, but I think this dividends is safe because it's such a low payout ratio. To add to their payout ratio, they actually have quite a lot of cash, and they recently issued some bonds. So they have I think they issued 2 billion of bonds at about a 2% yield, which don't have to be paid off for years and years and years. So they're taking out those bonds when there's a really low interest rate worldwide. So they're getting bonds at 2%, and they can buy back their shares and pay out a dividend. They have plenty of cash to weather out this coronavirus storm anyway. So as you can see on this slide, there's some more growth metrics. So as I said before, their revenue is up just over 11% from last year. But more impressive is their income growth, which is between 15 and 17%, depending whether it's non-GAAP or GAAP. But they're just accounting principles, the difference between non-GAAP and GAAP. Well, let's just say 15 to 17% for income, which is stronger than the revenue growth. So they're getting more profitable, which is nice to see. Their payments volume is only up 6%, but still a gain. And their entire process transaction is also up 11%, which makes sense because their revenue's up 11%, and they make money from the amount of transactions that they process. Their dividend and share buybacks up 19% together, so 20%, as I mentioned already, year over year. So Visa's growing at a nice clip, particularly in comparison to the S&P 500. So as we all know, Visa has a fantastic brand image. Everyone loves Visa for some reason. I don't know why, but they have a great marketing team. They sponsor the Olympics, FIFA, which is soccer for the Americans, and the NFL. Yeah, they've won a few awards for having the best brand in the world, which is pretty cool. So yeah, I showed this slide before in my top 3 stocks for May 2020, if you want to look at that video up there. But Visa is one of them. But yeah, just to show that maybe there's a correlation or a causation between using cash and the spread of viruses, because as you can see, Spain and Italy use the most cash in Europe and possibly the world, and that's where the worst rates of infection for coronavirus were in Europe by a margin, by quite a large, substantial margin. So that might people might realize that and put two and two together and maybe say, oh, maybe we should start using less cash if it spreads viruses. But that's not confirmed. That's just the speculation that I have. Okay, so we've only talked about the good points for Visa, but obviously it's not perfect. So I'm just going to run through the bare points for Visa and its potential competition. Then I'll run through what I'm doing in regards to Visa, and that's it. Cool. Okay, so I think the worst aspect for Visa is its price. So even with this correction, Visa is really highly priced. So with a price to earnings ratio of 30 and a price to sales ratio of 6, it's an expensive stock, especially for such a big stock. It's very expensive. As we mentioned though, the PE might be a little bit inflated because of all the buybacks they've been doing, but I still think it is still an expensive stock regardless. 30 is a very expensive stock. Another bear point is we don't really know to the extent to which coronavirus is going to affect their business, but this could be a good or a bad thing. So over the next few months, we may see Visa drop in price or remain around this price. So there might be a few buying opportunities over the next number of months as their earnings reports get released. So for me, I'm having a look at it now. I bought one share already, and we'll see how things shake out over the next few months anyway, in regards to the COVID-19 situation. But 100% the revenues are going to drop. So we know that for a fact, but we don't know how this is going to affect their stock price. Their balance sheet is okay. It's nothing to be worried about at all. But it's not one of those 10 out of 10 balance sheets like Facebook or Apple have, where they just have a ridiculous amount of cash and like no debt. They're about 1-to-1 on long-term debt and cash, so they're perfectly safe, but they do still have quite a bit of debt and liabilities. But yeah, luckily their operating margins is quite high, so that can help them pay off this debt. Let's just talk about their competition now. There are some restrictions in different countries, like China and Russia don't want Visa taking over the entire market like it has done in Europe. They want their own companies to do well in their countries, so there's Chinese versions and there's Alipay and WeChat in China that are really taking off. So those are basically on your phone. I know you have this with pretty much every card where you can tap credit card machines with your phone, but everything is paid like that with Alipay in China. So it's actually much handier than Visa. So maybe they're not really going to break into China and Russia as well as they have into other countries. But the worry is that, we already know that, but the worry is that Visa may not be able to break into new countries like it has done. And this kind of restriction for Visa and government regulations might hinder Visa's growth in the future as there's less places to expand into. Okay, so their competition. So from the surface, I thought the biggest competition for Visa was the apps like Venmo, Cash App, and Revolut. But when digging a bit further, they actually kind of have deals with these. So yeah, there's different deals they have with Revolut. So Visa aren't too worried about those kind of on your phone apps that are made in America and Europe, because they have different deals with them. However, they are worried about Alipay and WeChat that I already mentioned. But actually, their biggest worry, which was very surprised when I dug through their annual report, I found them constantly mention cryptocurrencies and digital currencies, which I was very surprised about, as personally I didn't think digital currencies would pose a great threat to Visa or those kind of Visa or MasterCard kind of transactions, because they're less efficient than Visa and MasterCard would be due to their decentralized nature. But obviously Visa think differently, and I'd be much more inclined to listen to Visa because they're not going to say, oh, we have competition from digital currencies. Like, they're not going to say that unless they definitely think they do. So they're telling us that now. So that's it's actually kind of interesting. It makes me more bullish on cryptocurrencies. So usually the best place to hear about something that's going to take off is from a competitor, from a company that competes with that company. So for me, I'm going to have exposure to both Visa and cryptocurrencies, as well as Square and Revolut and stuff like that. So I'm kind of taking a section out of each of the digital payments space of the future, because a rising tide lifts all boats, because cash is getting eaten away. Like, no one's going to be using cash in 20 years really. So there's room for all those different industries to grow, and there probably will be a few more that we can't even think about yet now. Okay, so you may have guessed that I am in fact buying Visa. I'm going to make it a medium-sized position in my portfolio. It's not going to be my biggest position. The reason I'm buying Visa, I had some money invested in bonds, which was getting me about 1% a year. And just thinking about that, I was like, there's absolutely no point making 1% a year off a bond. I'll invest my money in Visa and get 1% in dividends, and that dividend is going to increase. It's much more likely that it will increase in value as well as the dividend getting increased. So I'll do much better having that bond money in a relatively safe company like Visa, rather than just having it in a safe bond where I'm going to be losing money to inflation. As you may know, my portfolio is like quite heavy with growth companies where I really want to, make the most out of my money. But with Visa, I'm kind of going for a safer company where this money would have been in bonds, in safe bonds. But I think it's kind of pointless to have any money in bonds at the moment. So that's why I'm moving my money over into Visa. And I believe Visa will beat the market, beat the S&P 500, as it has done for the last 20 years. Even by 2%, I'd be very happy with, which like 2% over, like I'm looking to hold Visa for decades. I'm literally going to hold it for decades, I'd imagine. So 2% over decades. So say the S&P does 8% over the next 20 years. If Visa does 10% over the next 20 years with the dividends reinvested, like that's a huge difference. So I think it'll be a nice slight market beat over the next 20 years. That's what I'm hoping, and that's why I'm investing in it. So I hope you can understand my reasoning in investing in Visa, and I'll keep track of it over the next coming months. And if it is hit heavily by the COVID-19 situation in the short term, I'd be happy to pick up shares at lower prices than it is now. I'm not sure what's going to happen in the short term in regards to Visa stock. It may just stay flat because they'll be reinvesting their earnings into buybacks. So I'm not sure what's going to happen, but I'm definitely going to keep an eye on it. So yeah, I've doubled up my position at the moment. So I'm just telling you what I'm doing. So you make your own decisions, but that's what I'm doing. I think it's going to beat the market, and I kind of want a safe company at the moment. So that's why I'm looking into Visa. Okay, I really hope you enjoyed this video and you learned something. If you want to check out my top 3 stocks, I've already mentioned it. I'll link it at the end of the video anyway. I'd really appreciate it if you could drop me a like. That would be really appreciated. I really hope you enjoyed, and I'll catch you guys in the next one. Cheers.